Today in crypto, the recent market moves have shaken the faith of some crypto holders. Here is why you need to stay focused on the big game, stacking sats and then chilling. Just how many sats do you need to stack to be an elite Bitcoiner? How many Bitcoin do you need? A major US mining firm opens up for business. Lightning Network flaws remain. A recent DeFi attack gets a landmark payout for claimants on the insurance policy, and Decentraland goes live. The Cryptolark. This is where you subscribe for all of the latest and the hottest happening in Cryptoland. So I want to talk about Bitcoin with you for a minute, and I'm not going to be bringing up any fancy charts here today. Look, attitudes in crypto, they can change super fast. Just 2 days ago, everyone was super bullish. We have such short memories. The long-term trend is still intact. In fact, we could suffer a further price movement down and still be macro bullish for Bitcoin. Always remember to see the forest from the trees. Since the start of the year, Ethereum is up around 103%. And Bitcoin's up around 34%. And we are just at the start of the next Bitcoin super cycle. Look, nothing goes up in a straight line forever. There are many stops along the way. But, sir, I was promised the moon. Not without lots of pain and suffering, kid. That is how we get to the top of Bitcoin. Now, the thing to remain focused on is, of course, just stacking your Bitcoin and making sure that you have got your ticket for the moon rocket secured. Now, just how much Bitcoin do you actually need to be on the moon ship? Well, look, we all have different incomes, we all have different financial situations and different financial goals. But let me just share some food for thought with you. So if you own 0.28 Bitcoin, then guess what? You're statistically going to be in the richest 1% of the Bitcoin holders worldwide. Crazy, right? It's not that much Bitcoin. Most people can achieve that. And that's only with a little over a quarter of a Bitcoin. Also, for your contemplation, probably no more than, let's say, 5 to 6 million people will ever be able to own one whole Bitcoin. Remember, up to 6 million Bitcoin, they're already gone, lost forever. And of course, we're seeing more and more institutions getting into Bitcoin all the time. The whales keep gobbling up all the Bitcoin they can get their hands on. And retail mania is going to return. It's just a question of when. And for perspective, there is not enough Bitcoin for all of the customers of Fidelity to own even half of a Bitcoin. And there's not enough Bitcoin out there for each person with a Coinbase account to own half of a Bitcoin. Getting one whole Bitcoin is an amazing investment goal for so many people and will put you in the top tier of crypto holders globally. Currently, a little less than 800,000 Bitcoin addresses own one Bitcoin or more. If you can get 10 Bitcoin, then you are in a class of Bitcoin elites. Great goal if you can get there. Also, part of the reason why we, of course, are always saying stack sats and chill is because realistically, very, very few people can actually just go out and, buy 10 Bitcoin, stack Bitcoin and chill. You go buy 10 Bitcoin? Not many people can do that. But most people can buy 0.01 Bitcoin, otherwise known as 1 million Satoshis every week when they get their paycheck. That is achievable for most people. Anyone who has been dollar cost averaging over the last few years will be well in profit at these current prices and will have also accumulated a very nice little chunk of Bitcoin. And chances are, if you have been stacking your sats diligently over the last couple of years, you're already in that elite club of Bitcoiners. Remember, play the long game. Get your Bitcoin and secure your financial freedom. Also, if you're planning to just be sitting on your Bitcoin for the next few years, then you might want to consider using a service like BlockFi, which allows you to earn 5.1% annually on your Bitcoin, as well as offering good rates on Ethereum, Litecoin, and dollars. Now, that compound interest paid out over a few years can really make a big difference to your long-term Bitcoin holds. There is a link down below if you want to learn more about BlockFi. Okay, so let's move on to the news. So, Bitcoin mining startup Layer 1 Technologies has finally started running its mining operations down in Texas. Layer 1, by the way, was the mining venture backed by famous investor Peter Thiel. Now, we talked about this story a few months ago, but they have now deployed their first mining units. Over the next few months, the team plans to deploy 100 megawatts of Bitcoin mining gear, which will then give them approximately 2% of the entire hash rate of Bitcoin, which is a pretty significant amount of Bitcoin mining hardware. Their long-term goal, though, that is incredibly ambitious. They want to see US mining hash rate grow all the way up to 30% of the total, and they want to do it by the end of 2021. Now, this particular mine, along with two other Texas mega mines, may just make that 30% into a reality. The continued geographic distribution of Bitcoin mining, I only see it as a net positive for the Bitcoin network. And in particular, yes, it would be great to see the United States taking a larger share of the pie, since currently it only accounts for around 5% of Bitcoin mining hash rate, but up to 20 to 30% of crypto investors. Big gap in the numbers there. China has been the runaway leader in Bitcoin mining for way too long. Time for some competition in this market, so great to see the US getting involved. Next up, we're going to be talking about the Bitcoin Lightning Network. Now, a new paper release says that the Lightning Network is growing increasingly centralized, with around 10% of the nodes controlling around 80% of the wealth. And no, this is not about wealth distribution and all that stuff. This is about security of the network. Wealth distribution inequality in the Lightning Network is not a good thing, because such an unequal distribution makes the network less secure. You see, the problem is this. If just a small set of nodes in the Lightning Network are holding the majority of the funds, that means that these nodes become incredibly key to the payment relay infrastructure of the Lightning Network. Now, much like with a Jenga tower, if you remove one of these key components, then the network will still be going just fine. But if you remove a few of the big nodes via direct attacks on those nodes, suddenly there are big holes in the network, leading to a possible functional collapse of the Lightning Network. Look, I like the Lightning Network. I think it's a great layer 2 solution for Bitcoin. But much like we are currently seeing with decentralized finance applications, there remains a lot of potential for exploits to take place. This is all still very new technology. Even if you can go out and use it today, doesn't mean that it's perfect. And you can be sure that if there is an exploit out there, someone is going to find it. So it's actually good that this paper was published. It means that developers can now work to address those problems and to make Lightning Network even better than it is right now. And speaking of exploits in decentralized finance, Nexus Mutual, the smart contract insurance platform, has changed their stance on the BZX exploit that happened earlier this week. Now, at first, Nexus denied coverage since it appeared that it was not a case of smart contract failure, but a case of Oracle manipulation. But since that time, BZX has released a post-mortem report that admitted that yes, it was indeed a fault in their code, that a failsafe that was supposed to work indeed failed. So what that means is that Nexus Mutual, which insures against smart contract failure, they had to pay up the money. Now, not many people actually had insurance in this particular situation, but there were a few people, and they are now covered for their losses. Now, I think this story is super important because it really is a landmark case for decentralized finance insurance protocols, that they actually work, that people can actually take insurance against smart contract failure, and it works. I think this can bring a whole lot of confidence to new users of decentralized finance, that they can go out and take insurance against these kind of exploits, and that they can be covered and get paid, which is great. And while crypto insurance is just getting started, this is going to be big. Watch out for it to have a massive impact on the crypto scene in the coming years. I have a feeling that insurance will become ubiquitous over the next 5 to 10 years in crypto, and that crypto projects offering insurance will get a lot of attention. Also, it seems that Nexus is now looking to offer insurance against Oracle attacks as well, which is a great combination for products like Chainlink and Teller and others that are offering Oracle services. And they're even talking about, and wait for it because this is a big one, insuring against hacks on centralized exchanges. Very, very cool stuff, and that would mitigate a massive risk that most people face when staking crypto, for example, on a centralized exchange. And finally for today, Decentraland, the decentralized shared virtual world, is officially open for business. There will be $100,000 in early prizes to attract those who are curious about getting some non-fungible tokens or perhaps learning more about Decentraland. Decentraland is initially offering 15 different games to play inside of their VR world. And players playing those games can then, of course, win real prizes. So they can win mana, which is the crypto money of Decentraland. They can win non-fungible tokens like a crypto kitty, as well as real estate within the Decentraland VR world. Now, all of those prizes, of course, can be kept and stored on your Ethereum wallet, or you can just sell them for cash money, for Ethereum or something else. The potential for such a game, I find it super interesting. And sure, it's still really early days for Decentraland, but this idea of a community-run, decentralized virtual reality world, that's some cool stuff. This is like the delivering of all that sci-fi technology we always wanted back in the day. Now, if this game can become really, really popular, then over time, the scarce resources within this game, particularly the land, could achieve very, very high valuations and provide a lot of rewards for early believers in the project, as well as, of course, offering a unique array of social experiences in this VR world, as well as unique opportunities for advertisers and different things like this. A lot of potential there. Anyway, the question for you today, will you play Decentraland? Would you buy a piece of land in this VR world? Crazy stuff, I know. And do you think that these kinds of games are going to be really important in the future of cryptocurrency adoption? Let me know about it down below in the comments section. Thank you so much for watching today's video. Hope that you're having an awesome day wherever you are out there in the world. I know you're all out there. I know you're all out there. It's so awesome getting to talk to you guys all the time. So thank you so much for taking the time out of your day to come over here and watch this video. And if you did enjoy it, the thumbs, guys. Give it a thumbs up. That'd be super, super awesome. Subscribe to the channel if you're new around here. Long live the blockchain. And peace out till next time.